Committee of the Chandigarh branch of NIRC of ICAI welcome you all on behalf of the Chandigarh branch for this virtual meeting on recent judicial developments in income tax law. We have with us our panelists, CA Ashish Agarwal, and our guest speaker, Advocate Nikhil Goyal, also ACA. So we welcome you, sir. And first of all, I would request CA Anil Kakkarji, Chairman, Chandigarh branch of NIRC, to make his welcome address.
Thank you, Vinci. Thanks a lot. Good evening to each and everyone, respected members and all other learned viewers. I, on the behalf of Chandigarh branch, welcome and thankful to Advocate CA Nikhil Goyalji, guest speaker of today's webinar, for accepting our request to enlighten all of us on the topic recent development in the income tax law. We also welcome and thankful to our panelist, CA Ashish Agarwalji. Thanks, Ashishji, for sparing your valuable time for the profession. And we on the Chandigarh branch also welcome all the learned viewer. I am seeing so many senior members, Ashok Goyal sir and other Bhupinder Hai sir is there. I, on the behalf of Chandigarh branch, welcome all the learned viewer on today's topic. Well, member, as you all are aware about the recent developments, 148 के कुछ नोटिस पहले हाई कोर्ट ने इनवैलिड कर दिए और उसके बाद रिसेंटली लास्ट मंथ में सुप्रीम कोर्ट की रूलिंग आई और उन नोटिस को वैलिड कर दिया गया. So Nikhil Goyal is here to enlighten all of us on what way forward ahead now with all of us, and other development. He will also discuss other development in Income Tax Act also. So once again, I welcome and thankful to the both guest speaker as well as the panelist of today's webinar. Or in the end, thanks each and everyone. Over to Vinci for the further proceeding.
Thank you, sir. So I would like to introduce you to all our panelists for the day, CA Ashish Agarwal ji. CA Ashish ji is a member of the Institute of Chartered Accountants of India since 2001. He has vast experience in consultancy of direct taxes and handling corporate affairs in different areas. His professional experience includes consultancy on company law matters, handling of taxation work, facilitation with banking and project consultancy, audit of many industries like steel and alloys, packings, containers, rice mills, etc. So we welcome you, sir, and we would be delighted if you could share a few words with us. Ashish Agarwal ji.
Hello. Welcome to all of us. मैं बहुत ज्यादा तो नहीं बोल पाऊंगा क्योंकि आपने इतना आपने मेरे को यहाँ पे इनवाइट करके मेरे लिए प्लेजर किया है और बाकी निखिल जी इसमें बहुत अच्छा अपना योगदान देंगे और पूरा नॉलेज शेयर करेंगे जो मैं सोचता हूँ कि सबके लिए हमारे यूजफुल होगी.
Thank you, sir. So now we have with us our guest speaker for the event, Advocate Nikhil Goyal ji. So he has done his LLM in corporate and financial laws after completing LLB from Delhi University. He has also completed his chartered accountancy course. His professional experience includes working with EY LLP as the client support specialist and being the partner with Goyal A. Kumar and Company. Presently, he is the managing partner of GAK Partners. He also holds special social volunteer experience with Worldview Education Services Private Limited, Wieland International China, and World Federation of UN Associations. He is a practicing advocate with litigation in specialized economic laws and representation before Punjab and Haryana High Court, Income Tax Appellate Tribunal Delhi, NCLT Chandigarh, Income Tax Settlement Commission Delhi, and Enforcement Directorate Chandigarh. So we welcome you, sir, on behalf of the Chandigarh branch, and now request you to please proceed with the technical session.
Hi, good evening. Thank you so much, Vinci ji, for that introduction. And as always, Anil ji, it's a pleasure to address our audience, especially our fellow members of the profession, with respect to more recent developments in the field of tax laws. Uh, we've done a few sessions in the past as well, and I remember I've been discussing this controversy, especially around Section 148 notices. Since its inception, we were discussing what particular views a particular court may take, and we were updating you from time to time about how these notices are being dealt with. Uh, I practice majorly at the High Court, and today, fortunately, I was able to make it in time because the bench had other considerations for administrative work, and I just rushed for this seminar after that. So I will be referring to certain decisions as well, and the scope of today's session will be twofold. I will be first deliberating upon how the regime has been set up now with the new income tax law, which was introduced by Finance Act 2021, what it entails in the future, and how we as chartered accountants will have to amend our procedures with respect to handling reassessments, because the new law would now require intervention at different stages, which previously was allowed at multiple times. Now there are certain new restrictions in place which one will have to adhere to. After we discuss this new regime of tax laws as implemented and being perfected over time in our Finance Act, I will then come to the decision of the Honorable Supreme Court in the Union of India versus Ashish Agarwal matter, wherein the Honorable Supreme Court has extraordinarily exercised the jurisdiction under Article 142 of the Constitution of India. I'll briefly touch upon what exactly that entails and what exactly is the way forward with respect to the various notices. I think one of the objectives of taking up this session was because we have personally filed a lot of cases in the Punjab Haryana High Court. The status of those cases was stayed at the time when this decision was given by the Honorable Supreme Court. So we'll just explain how exactly our chartered accountants, which I believe primarily are joining in from Chandigarh, Punjab and Haryana, what exactly does this judgment hold for you? And how can you deal better in terms of making sure that any defenses that may be available to your assessees are rightly taken in time? And in case certain judicial interventions can help ensure that justice is properly served upon your particular assessees. We'll also discuss certain ways forward deriving from the law that has evolved between 2002 and 2022. Lastly, I will be touching upon the topic on how our courts are entertaining petitions against a speaking order passed under Section 148A, Clause D of the Finance Act after 2021. So as you must be aware, and you may have seen in your professional experience, the regime is somewhat allowing for passing of speaking orders before the assessment proceedings have started. These notices were primarily received for assessment year 15-16 and assessment year 18-19. And these are the cases which were not previously opened by the department through previous notices which were issued in the year 2021. We'll help you in understanding how you can deal with the notices that are already issued prior to the Supreme Court judgment with respect to AY 15-16 and 18-19, and how to further deal with these notices when they do come up. And I believe most of you must have started receiving the said notices as well. All right, so having just discussed the scope of this particular session, I will start off by delving into the history around what is a reassessment and how exactly this has evolved over time. Now, we all must have heard of a very famous judgment of GK and drive shafts. It's a 2002 judgment reported in 2003, which deals with a judicial intervention by the Honorable Supreme Court back in that year, wherein certain substantive rights were granted to an assessee. If my senior professionals who are attending this particular webinar, they may recall the system of reassessment was developed in a way that the assessing officer had a threshold of jurisdiction based on reasons to believe. So the reassessment proceedings were based on existence of a reason, basis certain information which forms a live nexus to a conclusion that there is an escapement of income. So I've touched upon a lot of technical terms in just one sentence. So let's just go over it once again. So the previous regime prior to Finance Act 2021 required that the assessing officer has to first have a reason to believe. Now, reason to believe is a situation where you're referring to material. That is the second aspect. So there has to be in existence certain material basis which there has to be a reason. The reason have to have a live nexus with the information available to show, and this is the most important part, there has to be an escapement of income. So the regular course as per the Income Tax Act is you have to file your return. After the filing of your return, within 9 months of the end of the assessment year, the assessing officer has the power to initiate assessment under section 143(2) of the Income Tax Act. There are scenarios where certain information is flagged or your return has certain information which automatically processes under a computer rated scrutiny selection software that is adopted by the Income Tax Department. So most of you must have dealt with these situations or advised your clients on what kind of transactions could actually lead to the possibility of being selected under this computerized system. So there are cases where your assessees face this regular scrutiny. This proceeding is completed under section 143(3) of the Act. Now, where this window is not exercised, it is to be believed that your income tax return as filed by you has attained a level of status quo and finality before the income tax authorities. Now, it is to say that somebody has been put to sleep. Once you filed your return and no assessment has taken place, there is a sense of finality. Let's also take another scenario where you were selected for a regular scrutiny and maybe there were no additions called for at the time of the assessment. Or even if there were additions called for, you have dealt with them in an appeal or in other forums by filing further appeal, second level appeal, third level appeal, so on. So there is a status that, okay, fine, my income tax return or my assessment order in essence has reached a finality. However, the income tax department sought fit that what if I do not have the required information at the time of assessment proceedings or at the time you have filed your return? And what if I come across certain information? So the wisdom of the legislature was, it should not be such an easy exercise for an assessing officer to simply exercise assessment powers where they have missed the train as far as reviewing your ITR or conducting a regular scrutiny proceedings is concerned. So this additional burden is the burden of developing a reason to believe basis the information on record. So mere existence of information was never treated as the reason to just initiate an assessment. There had to be, beyond the information, a formation of belief. This was further supported by a sanction from a higher authority, which was set at the Joint Commissioner or Additional Commissioner for up to 4 years. And if the information relates to escapement of income above rupees 1 lakh and not more than 6 years have passed, then by taking an approval from the Principal Commissioner of Income Tax, one could reopen the assessment. So these additional checks and balances were introduced because this is an extraordinary exercise of power. So one has to understand that reassessment is not to be taken as a regular course. And it is very important that we understand that the jurisdiction is being correctly exercised by an officer. Because if we are not taking these jurisdictional grounds at the very root, there is a possibility that your client will have to go through a complete scrutiny and there could be issues even beyond the assessment reasoning, the reasons initially recorded, which will form part of the assessment. So you are being put to a higher scrutiny, not just for the information that is available with the department, but also with respect to future information, which may come to notice at the time of the assessment proceedings. Now, to safeguard the assessee, what if a scenario exists that the information that is in possession of the officer is incorrect? Or what if a situation is to arise where the information is correct, but jurisdiction of the officer is incorrect? There are certain safeguards that existed in the previous law, especially one which related to not allowing the reopening of assessment. That this is the first proviso to section 147. This is the law prior to 2021. The first proviso dealt with a situation where an assessment proceedings have already been conducted and there is no reason to show that the assessee had not cooperated in fully providing information to the department. So there are many safeguards that exist within section 147, and one had to test each reason to see whether the jurisdiction is being correctly exercised. In 2002, the Honorable Supreme Court in the GK and Driveshaft decision made sure that the assessees get an opportunity to test that the information in possession and the necessary sanction are actually based on correct assumptions. Therefore, an opportunity was provided to get a copy not only of the reasons recorded, but also of the approval granted by the higher authority. An opportunity was given that you may file your objections to the reasons of reopening and also challenge any jurisdictional issues. After the objections being filed, the assessee was given a clear opportunity that any additional material that is coming into reference basis merit or basis jurisdictional issues can be referred to the assessing officer. The assessing officer was then given a responsibility that they have to consider this information and pass a speaking order. So this is a quasi-judicial exercise of power. So I'll just explain to the audience that there's a difference between a regular administrative exercise of power and a quasi-judicial exercise. A quasi-judicial exercise of power is similar to a court deciding a matter. So there is a higher level of responsibility that has been accorded upon the assessing officer, that one has to be independent in deciding the objections filed by the assessee and then come to a conclusion by way of passing a speaking order. Now, between 2002 and 2022, there have been multiple instances where the law as laid down by the Honorable Supreme Court in the GK and Driveshaft decision has been further refined so as to provide additional protections to the assessee. Now, as early as 2006 and 2007, there are decisions which say that if the assessing officer fails to provide you a copy of these reasons at the time of assessment proceedings, even after you requesting for the same, this actually makes the assessment order bad. You can refer to the Bombay High Court judgment in Asian Paints, and there are multiple Delhi High Court judgments as well on this issue. So the consideration of question here is, if I as an assessee ask my assessing officer for a copy of the reasons and I'm denied this copy, or for some reason my assessment proceedings are to continue, I can specifically request the High Court to interfere and make sure that the copy of reasons is duly provided to me. Now, why such an intervention was allowed by the honorable courts? So this intervention usually happens under Article 226 of the Constitution of India. Now, generally, the route for reaching the High Court in terms of income tax matters is, it is a third level appeal. Because first, after an assessment order is passed, one may approach the Commissioner Appeals. Thereafter, the second appeal lies before the Income Tax Appellate Tribunal. And if you are still unsatisfied, you can approach the Honorable High Court in an income tax appeal, but only on the substantial questions of law. So that is the general course. And we as professionals have seen over a period of time that it takes a while for these appeals to get disposed. And it might not be an efficacious remedy to wait for that long just to take into consideration a jurisdictional issue or certain violations of principles of natural justice. Not being provided with such reasons or having certain jurisdictional issues at threshold, these are issues which are entertained by honorable courts, and there are multiple decisions which support this theory that even if tomorrow this order can be challenged in appeal, after the assessment order is passed. But if at threshold it is seen that the jurisdiction in itself has been wrongly exercised, or there is a blatant violation of principles of natural justice, then the High Court ought to interfere and make sure that specific remedies are provided to ensure that any grievance is properly addressed. There are other judgments as well which have dealt on issues like change of opinion. The leading judgment in that respect was Kelvinator, that is a 2010 Honorable Supreme Court judgment. And that decision has been widely followed to show that once an assessing officer has taken an opinion on a particular transaction or a matter, if reassessment is done on the same issue, the same was held to be invalid. There are other interventions. You can also refer to an Honorable Supreme Court judgment in Taxpan. This was a Delhi High Court judgment, which was later on challenged by the Income Tax Department before the Honorable Supreme Court. Here, the Honorable Court had held, vis-a-vis the maintainability of a writ petition, that it is important to see if there is an outright jurisdictional issue or the assessing officer is liable to usurp certain powers at the jurisdictional stage itself, at the time of forming its opinion. The High Court can interfere and ensure that cases where no jurisdiction is affordable to the assessing officer, such cases are quashed. Further, the Honorable Delhi High Court, in a very famous decision of sub-infrastructure. So what I'll do is, after the presentation, I'll make sure I'll send across the list of these judgments along with their ITR or taxman citations, just for the benefit of our audience, and they can make reference to these decisions later on as well. So I'm currently referring to a Delhi High Court decision in sub-infrastructure. Now, this is a very important decision wherein the Honorable Delhi High Court had laid down certain guidelines. What are these guidelines? They have stated that at multiple occasions, it is seen that the revenue authorities are not properly disposing the core essence as given down in GK and drive shafts. So they had given a checklist of things that the assessing officer ought to do at the time of sharing the copy of reasons. The first and most important thing is that the assessing officer was to share not only the copy of reasons, but also the copy of the sanction approval under section 151 of the Act. Secondly, the Honorable Court said that any material that is being relied upon as part of the reasons to believe, that information ought to be shared with the assessee. Further, it provides that if any other material is available on record which is likely to be used as part of forming a decision with respect to escapement of income, that report may kindly be shared at the time of initial objections. And lastly, it was again informed to the assessing officers that this exercise of power of giving a speaking order, disposing the objections of an assessee, is a quasi-judicial power. So it should not be treated as a casual dispensation of objections. One has to apply judicial mind and pass a speaking order. So a speaking order is one, as held by Honorable Supreme Court, where the defect in itself shows. So a non-speaking order will be one where an issue has particularly not been dealt with. So this was the recommendation given by the Honorable Delhi High Court, and this decision has been referred from time to time in order to give force to the argument that even if the alternate remedy exists, where the assessing officer has defaulted in not even providing the complete information at the time of reopening of assessment, this makes a case for fit intervention in order to allow for justice to be properly dispensed. Now, this is the law that has evolved over time, and section 147 has gone through multiple amendments during this time. Now, the Honorable High Court and Supreme Courts have dealt with such issues over time, and the general consensus was that a speaking order disposing the objections raised by an assessee would be an order which can be challenged under Article 226 of the Constitution of India before an Honorable High Court. Now, what our legislature has done in its wisdom, they are now agreeing to the fact that yes, there are certain issues which need to be dealt with at the time of the initial assumption of jurisdiction. Therefore, only cases that are fit after taking into consideration all objections of an assessee should proceed with a proper assessment. Now, one has to see that once a notice under section 148 is issued, a complete assessment proceeding will continue. Now, this will sometimes lead to harassment to an assessee whose case is completely not made out on the basis of jurisdiction. So they will have to go through an entire assessment and thereafter go and appeal to give even jurisdictional issues which exist at threshold some force, say at a CIT appeal or an ITAT level. So honorable courts have from time to time allowed for this intervention. Now, in order to modernize the scheme, the Income Tax Department has been provided a new regime for reopening of assessment. The sections remain the same, but the same were repealed as they existed on 31st of March 2021, and a new regime has been introduced as effective from 1st of April 2021 after the presidential assent. Now, what is this new scheme? Now, one of the major benefits of the new scheme is the pecuniary jurisdiction being introduced, and a threshold which initially was 6 years under the previous law has now been reduced to 3 years. But I would not simply call it a reduction, because after reducing the initial onus to 3 years, the Act also provides under section 149(1)(b) that reopening of assessment can be taken up for up to 10 years, where the escapement of income relates to an asset which has been identified by the assessing officer. So there have been additional checks that have been added under section 149, and there are certain deletions under section 147. Most notably, the threshold for reopening of assessment has been drastically reduced. What was the law before 1st of April 2021? The law was the assessing officer ought to have a reason to believe. This has been reduced to information in possession. Now, if we read section 147 of the Act, it simply states where the assessing officer has information in possession that income has escaped assessment. So you would see that initially what the threshold was, that mere information in possession was not sufficient. One had to also provide cogent reasons and draw a live nexus between the information available on record and also provide a reasonable opportunity of being heard. This regime now shifts to a simple information in possession. But what has been added as a safeguard is a new section called 148A. Section 148A of the Income Tax Act is a pre-notice inquiry. So it provides that where an assessing officer has certain information which could relate to escapement of income, he is to first conduct an inquiry himself. However, this inquiry being conducted under section 148A, subclause A, is not a mandatory provision. The subclause starts with may. So therefore, the assessing officer, once he has the information on record, he may or may not choose to do certain further investigations. However, once he is satisfied that the information in possession is correct, he then proceeds to issue a show cause notice under section 148A subsection B. This show cause notice is issued after the prior approval of the approving authority under section 151. Now the approving authorities have also been changed. Initially in the previous law, what was JCIT up to 4 years and PCIT for up to 6 years has now been changed to PCIT for up to 3 years and CCIT for years beyond 3 years. So a higher level of responsibility has also been added. Therefore, these amendments that have been proposed are being proposed in a bona fide manner by the legislature, just to ensure that the assessee is properly given opportunities, and also a proper scrutiny of how these reopening of assessment is being conducted is shifted to an authority of responsibility. Now, at the time of issuing of show cause, the assessing officer is to provide you not just with the information in possession, but also documents that have been relied upon. So this show cause notice should be holistic. It should not just contain the information per se, but should also give the documents that have been relied upon. So what I have been given to understand from the income tax department, that earlier practice where an approval memo was forwarded to the authority for sanction, now the regime is more computer based. Now at the time of issuing the notice, show cause notice under section 148 AB, the assessing officer will simply seek an approval from the PCIT/CCIT at this stage. And once this approval is granted, the assessing officer can issue such notice to the assessee. There is also a possibility that the PCIT may reject the request for sanction and the case can be closed at that point itself. Now, coming to the scenario where a show cause notice is issued to you, what would be the responsibility at this stage where an information has been supplied to you? There could be one of two scenarios. The information that has been provided by the income tax authorities is correct, or the information provided is incorrect or does not relate to you. So one has to be careful at this stage, exercising right to reply against this particular show cause notice. If the information is wholly incorrect, kindly make sure that this is brought to the notice of the assessing officer and you are not simply answering on merit on the information in possession. So it has to be clarified in clear terms that the information in possession of the assessing officer is incorrect. Now, there could be a situation that the information in possession is correct, but one will still have to look at various jurisdictional thresholds and test each of them to make sure that the notice is valid. Now, what are these jurisdictional thresholds? Firstly, the information should be information as provided for by under section 148 of the Act. And the proviso to section 148 clearly provides what exactly is information. So just make sure that the information is in compliance with the guidelines as provided under the Act itself. Now, okay, if say we have crossed that threshold as well, that the information is correct and the information is covered within the definition as provided under section 148. The next step would be to check whether the time limit within which the issue of notice is allowed has been properly adhered to. Section 149 deals with the time limit for issuance of notice. Section 149(1)(a) allows for reopening of assessment within 3 years. So if we are to technically discuss in the current regime, you can today receive notices as of 2022 March. You could have received a notice for AY 1819 because that would be within 3 years. However, for years older than 1819, one could only go up to 6 years back. Why is that? There is a proviso that has been added. This is called the first proviso to section 149. The assessing officer cannot go beyond the time that was allowed for years prior to 1st April 2021. So this would cover up to assessment year 2021. Any reopening of assessment can only be done for a period which is not more than the period that was allowed in the previous regime. So the previous regime allowed for a maximum time of 6 years. So by that logic, as of 31st March 2022, the Income Tax Department was within their rights to conduct reopening of assessment for assessment year 15-16. However, the exercise of jurisdiction is not that simple. It is not a mere escapement of income that has to be tested. The law has been designed in such a way that the escaped income has to be identified by the assessing officer in the form of an asset. Therefore, up to 3 years, the only requirement is information in possession, which demonstrates an escapement of income. But years more than 3 years, they have to find the information which relates to escapement of income. But a second condition exists. They also have to identify an asset which relates to the escapement of income, or which exactly represents this escaped income. This asset has been defined as an explanation to section 149. This includes deposits in bank, cash, and also loans and advances or immovable property. Therefore, it has to be an asset. Now, a very interesting case came across. Somebody was discussing a recent issue of notice. Now, the information in possession with the assessing officer is that I have taken a loan from somebody. Now, that is a liability. This is not a case of an asset. And the years were prior to assessment year 1819. Now, the question here draws whether an asset exists which represents this escaped income. And the answer is no. Because one has to only deal where the information can collate to an existence of an asset which represents this escaped income. Until that threshold is crossed, one cannot interfere in conducting a reassessment proceedings. So there would be cases where cash is deposited in a bank account. That is a clear-cut information because that asset has been identified as the entry in the bank. And that asset includes deposits in the bank. Therefore, that escaped income is duly represented. However, make sure that the assessing officer has gone through the pain of identifying the asset in the show cause notice. A lot of times one would see that show cause notices do not properly deal with the assumption of jurisdiction. These issues are then raised by the assessee at the time of filing the reply under section 148 AC. I see a raised hand. I just want to check with the moderator. We can take all the doubts at the end of the presentation, if that is okay.
Yes, I think that would be fine. We can have the questions after the session.
All right. All right. Thank you. All right. So we were discussing in terms of the jurisdiction that can be assumed. Now, the income tax department and also you can say the ministry did not take too long to realize that this is a mistake, because identification of an asset alone can be a very difficult task, and that too at the threshold of passing an order under section 148 AD to have in possession information of such an asset would deeply hurt revenue's chances of making certain additions sustain. Now, what the legislature has done, they've introduced an amendment to section 149(1)(b) in Finance Act 22. Now, what Finance Act 22 does, that it adds to the jurisdiction for years beyond 3 years. So what was initially only a representation as an asset has been now expanded to mean an asset, an entry, or an expenditure. Therefore, escapement of income will no longer just be treated with respect to assets being identified. It could be an entry in the books of accounts, and it could also be an expenditure that has been incurred by the assessee. So this is to broadly cover additions which are based majorly around sections 68 through 69C and D of the Income Tax Act. So initially, when the legislature realized that we have set the bar too high in terms of identifying an asset, this has now been remedied by Finance Act 22. However, this would be a prospective amendment, and a challenge could be raised to this effect if the assessing officer is not to agree. So by now, most of you must have received your 148 AD orders and the subsequent notice under section 148 with respect to the reopening of assessment under the new law for AY 1516 and 1819. So if you haven't taken these grounds before the assessing officer at the time of the disposal of order under section 148 AD, it is reminded that you will not again get that opportunity as was provided under GK and drive shafts. So GK and drive shafts started after the notice under section 148 was issued. What has now evolved in law, you have to first deal with the objections. And once you're satisfied after dealing with the objections that jurisdiction still exists, it is only then a notice under section 148 is issued. Now, once you file a return of income against the notice under section 148, you have agreed to the jurisdiction of the assessing officer after reading the order under section 148 AD. So one has to be very careful at this stage. If there are any objections that one ought to raise, it is important that you do not end up filing a return of income, because these objections are to be raised against the order disposing the objections under section 148 AD. Now there are scenarios that are coming up under this new regime where an order under section 148 AD is dealing with the reply filed by the assessee, but the orders are cyclostyle. I will cover these in the third part of the presentation where I discuss the evolvement of the law around 148 AD. Now let's come to the issue at hand, the elephant in the room. The major issue that exists as of date is most of my CA brethren will be faced with this particular issue. Multiple assessment notices were shot out between 1st of April 2021 and 30th of June 2021. The force that was relied upon to issue such notices was a CBDT notification dated 31st of March and 27th of April, which extended time under the Taxation and Other Laws Amendment Act. So it is drawing force not from the Finance Act, but from the extension of time which was being granted on account of COVID. So what happened in those notifications, CBDT also further wrote that the law for reopening of assessment shall continue to be the law as it exists prior to 1st of April 2021. Some 90,000 notices were issued all across the country. Various high courts have passed their decisions. This scenario, as far as Honorable Punjab and Haryana High Court is concerned, our High Court had stayed these matters and the discussion on the same was adjourned sine die pending the decision of the Honorable Supreme Court. So what that means is those notices were enjoying a stay from whatever date they were introduced into the High Court by way of a writ petition, and till date of passing of the order of the Supreme Court, they enjoyed that stay. Now let's see what different high courts did. So the first judgment that came out was from the Honorable Chhattisgarh High Court, and that was a decision which was against the assessees. Over there, the Honorable Court made reference to the fact that because of COVID, there have been delays and the delays should be respected on both sides. And on that reasoning alone, the relief was given to the Income Tax Department to continue proceedings under the old law. Thereafter, various decisions were given by Honorable Delhi High Court, Honorable Rajasthan High Court, Honorable Bombay High Court, Calcutta High Court, and in unison. And I think the first decision being Honorable Allahabad High Court as well, which was in favor of the assessees. In unison, they agreed with the fact that once legislature in their wisdom has introduced Finance Act 2021 after the presidential assent, how can we be made to go back to a previous regime which does not exist as on date? So there was an anomaly. All these notices ended up getting quashed. Against the decision of the Honorable Allahabad High Court, Revenue preferred an SLP, that is a special leave petition, before the Honorable Supreme Court. Now, the question before the Honorable Supreme Court was whether all these notices get invalidated. Now, the crux of the discussion before the Honorable Supreme Court is, yes, they agreed with both sides. They said, yes, the exercise of power under the old regime was incorrect on part of the income tax department. But at the same time, they also agreed that if we end up quashing all these notices, the income tax authorities will be left remediless, because now the boat has sailed in terms of the limitation period. I'll just share my screen to read out the extract. All right. So I just want to check the screen is visible.
Yes, that is visible.
All right, thank you. Now the Supreme Court notes at para 6.6 of the decision, the substituted section 149 is the provision governing the time limit for issuance of a notice under section 148 of the IT Act. The substituted section 149 of the IT Act has reduced the permissible time limit for issuance of such notice to 3 years and only in exceptional cases 10 years. It also provides further additional safeguards which were absent under the previous regime pre-Finance Act 2021. Now, these provisions that have been inserted by Finance Act 2021 have been appreciated. The new provisions substituted by Finance Act 2021 being remedial and benevolent in nature and substituted with a specific aim and object to protect the rights and interests of an assessee, as well and the same being in public interest. The respective high courts could have rightly held that the benefit of the new provision shall be made available even in respect of proceedings relating to past assessment years, provided Section 148 notices have been issued on or after 1st of April 2021. We are in complete agreement with the view taken by the various high courts in holding so. So there was a huge hue and cry after the decision came out that the decisions of the honorable courts has been nullified. However, that is not the scenario. It is only in para 8 that the real reasoning of the order is being discussed. At the same time, the judgments of several high courts will result in no reassessment proceedings at all, even if the same are permissible under the Finance Act 2021 as per the substitute sections 147 to 151 of the IT Act. The revenue cannot be made remediless and the object and purpose of the reassessment proceedings cannot be frustrated. It is true that due to a bona fide mistake and in view of subsequent extension of time by various notifications, the revenue issued the impugned notices under section 148 after the amendment was enforced with effect from 1st of April 2021 under the unamended section 148. In our view, the same ought not to have been issued under the unamended act and ought to have been issued under the substituted provisions of section 147 to 151 of the IT Act. There appears to be genuine non-application of the amendments as the officers of revenue may have been under a bona fide belief that the amendments may not have been enforced. Therefore, we are of the opinion that some leeway must be given. Now, the Honorable Court came up with these solutions. The respective impugned section 148 notices issued to the respective assessee shall be deemed to have been issued under section 148A of the Act. Therefore, the Honorable Supreme Court has deemed that even if the notice says section 148, it is to be deemed as a notice under section 148A and should be treated as a show cause notice under section 148AB. The assessing officer shall within 30 days from today provide the assessees the information and material relied upon by the revenue so that the assessees can reply to the notices within 2 weeks thereafter. The requirement of conducting any inquiry with the prior approval of the specified authority under 148A shall stand dispensed with. So it is assumed that inquiry has been conducted and the approval has been taken. Now the assessing officer shall pass an order in terms of 148 AD after following the procedure as required under section 148 AB in respect of each of the concerned assessees. Now, this is an important aspect. all the defenses which may be available to the assessee under section 149 and or which may be available under the Finance Act 2021 and in law, and whatever rights are available to the assessing officer under Finance Act 2021 are kept open and shall continue to be available. The present order shall substitute and modify the respective judgments and orders passed by the respective courts, quashing the similar notices issued under unamended 148 of the IT Act, irrespective of whether they have been assailed before this court or not. Now, this is the interesting part of the judgment. Therefore, we have proposed to pass the present order with a view of avoiding filing of further appeals before this court and burden this court with approximately 9,000 appeals against similar judgments and orders passed by various high courts, the particulars of some of which are herein above. We have also proposed to pass the aforesaid order in exercise of our powers under Article 142 of the Constitution of India by holding that the present order shall govern not only the impugned judgments and orders passed by the High Court of Judicature at Allahabad, but shall be made applicable in respect of the similar judgments and orders passed by various high courts across the country, and therefore the present order shall be applicable to pan-India. In view of the above and for the reasons stated above, the present appeals are allowed. Now again, they repeat the same remedies that have been provided. And thereafter in para 11, the present order shall be applicable pan-India, and all judgments and orders passed by different high courts on the issue and under which similar notices which were issued after 1/4/2021 issued under 148 of the Act are set aside and shall be governed by the present order and shall stand modified to the aforesaid extent. The present order is passed in the exercise of power under Article 142 of the Constitution of India so as to avoid any further appeals by the revenue on the very issue by challenging similar judgments, with a view not to burden this court with approximately 9,000 appeals. We also observe that the present order shall govern the pending writ petitions pending before various high courts, in which similar notices under section 148 of the Act issued after 1/4/2021 are under challenge. So this is the operative part of the decision of the Honorable Supreme Court, which governs the issue with respect to Punjab and Haryana High Court. In our Honorable Court, although a decision had not been reached with respect to the final quashing of such notices, however, that order now stands dealt with because of this finding of the Honorable Supreme Court. Therefore, this common order is now applicable pan-India, whether or not the assessee has challenged the issue in a writ petition. So this benefit has been extended not just to assessees who had challenged this order in a writ petition, but it extends to everybody. Even if you did not file a writ petition, you are within your right to ask your assessing officer for a copy of the notice under section 148 AB, and further for the information that has been relied upon for this reopening of assessment. In compliance of this decision of the Honorable Supreme Court, now most of you would have received the notices under section 148 AB along with the information. Now what I've seen so far, everybody has received the same cover letter. Basically, it's a mail merge document where they just changed the name of the assessees and they've added the fact that there's going to be an annexure. So they have made a reference to this Honorable Supreme Court decision, and they have stated that they're complying with the Honorable Supreme Court decision and issuing the notices. To this effect, they are now acting on the instructions of CBDT as have been issued in instruction number 1 of 2022. So I hope my screen is showing this instruction number 1 of 2022.
Yes.
All right. Thank you. All right. So CBDT has now come up with an instruction which is to be followed by its officer Pan India, and it relates to the implementation of the judgment of the Honorable Supreme Court. Now, craftily, what has been done to the interest of revenue, they have taken the argument with respect to extension of time limitation within the Taxation and Other Laws Amendment Act as to have been accepted by the Honorable Supreme Court. We have gone through the judgment in detail. there has been no finding to this effect that whether the extended timelines after 1st of April 2021 and up to 30th of June 2021 has been agreed to by the Honorable Supreme Court. However, this has been taken as a benefit. Now, what this does, because of the operation of this instruction, the department is now issuing notices for years between assessment year 13-14 through assessment year 17-18. Department's logic is, if I may come directly, 6.2 I'm reading. Based on the above, the extended reassessment notices are to be dealt with as under. For AY 13-14, 14-15, 15-16. Fresh notice under section 148 of the Act can be issued in these cases with the approval of the specified authority only if the case falls under clause B of subsection 1 of section 149 as amended by Finance Act 2021 and reproduced in para 6.1. Specified authority under section 151 of the new law in this case would be the authority prescribed under clause 2, which is the Chief Commissioner of Income Tax. Therefore, they now say that we can reopen cases for AY 13-14, 14-15 and 15-16 in cases where an asset more than 50 lakh is identified and the same relates to the escapement of an income. Further, they go on to say AY 16-17 and 17-18, we are to issue fresh notices under section 148 in these cases with the approval of the specified authority under clause A of subsection 1 of section 149, since they are within 3 years from the end of the relevant assessment year. Now, this is where I have a personal disagreement. This is a personal opinion that I will be making now. This may not be treated as any legal opinion. I humbly feel that as on date, a notice under section 148AB cannot be issued as far as AY 13-14 and 14-15 are concerned. If we are to look at the amendment that has been made with effect from the introduction of Finance Act 2021, that is with effect from 1st of April 2021, the legislature has themselves imposed a new restriction on themselves. They say, we will not issue you a notice under section 148 if the time as would have been available under the previous regime has already expired. That stands at 6 years. How revenue is contending that we can still reopen assessments for AYs 13-14 and 14-15, their logic is that since the Honorable Supreme Court has accepted our arguments with respect to extension of time under TOLA, we should be allowed to reopen the assessment where escaped income is more than 50 lakh. For AY 15-16, I would still say this is the correct interpretation, that reopening of assessment should only be done in cases where an asset is identified above 50 lakh rupees and there was sufficient time available to open the assessment. Again, note that the specified authority in these cases will be the CCIT. Now, again, there is some difference of opinion with respect to AY 16-17 and 17-18. Now, if my math holds me right, if I am to add 3 years to 16-17, the limitation period goes to 31st of March 2020. And if I am to add 3 years to AY 17-18, the limitation period is again to end on 31st of March 2021. Now we are dealing with notices that have been issued on or after 1st of April 2021. One has to be cognizant of the fact that prior to 31st of March 2021, the income tax authorities did not think of reopening these assessments. It is only after 1st of April that they have decided to do a reopening of assessment. Therefore, the argument that the extension that was allowed between 16th of March and up to 31st of March 2021 shall apply even when we are recognizing the threshold of 3 years. Now let's carefully understand the provisions of section 149. 149 says if the reopening notice is being issued within 3 years, then we only have to have information in possession. There is no further pecuniary threshold that we have to cross. Therefore, since an extension of time is available, that is being exhausted to say that we were within 3 years at the time of reopening of assessment up to 30th of June. I personally hold this is not the correct opinion because 3 years have definitely passed. And in fact, they still are within their right to reopen my case if the additional threshold as required by section 149(1) subclause B is met. So we somewhere feel that this exercise of power by issuing this instruction can lead to an anomaly. What is being taken in consideration is not just the decision of the Honorable Supreme Court, but certain words have been added to it, thereby agreeing with the Honorable Supreme Court, but further interpreting the Honorable Supreme Court's directions. So this again remains to be my personal view. You may choose to believe the argument, and I can argue this as a devil's advocate from the side of the revenue. Because revenue would go on to say that our extensions of time were also done by the legislature. And since we have given ourselves the extension up to 30th of June, we will be calculating the period as per the new provision, but taking into effect the Taxation and Other Laws Amendment Act. I, for one, feel when the legislature has introduced a complete code, a substantive law with respect to the reopening of assessment on 1st of April 2021, they were cognizant of the fact that there exists the Taxation and Other Amendment Laws. And it has been noted by the Honorable Supreme Court that the very reason of introducing this new regime is to be more benevolent and to ensure that the assessees are provided more relief. Therefore, this would be an interpretation which could be under challenge. And we can definitely keep you posted because once these orders are disposed after 2 weeks from now, there could be a scenario where certain assessees would prefer to challenge this interpretation before the Honorable Court. So we can keep you posted on that issue. But this again stands to be a personal opinion as of now. One may choose to take it with a pinch of salt. Now, we have got a general feedback that following the instruction as well, a lot of cases have been closed because the threshold as required for AYs 13, 14, 14, 15 and 15, 16 was not properly met. Now we are in receipt of the notices from the Income Tax Department. Let's just delve into how exactly we should be dealing with them. I have briefly touched upon the things that need to be checked. If you are in agreement with this position that the income tax authorities cannot be now given the benefit of the Taxation and Other Amendment Laws Act after the introduction of Finance Act 2021, I believe you should raise this as the first jurisdictional issue when you're replying to these notices under Section 148. So just make sure that whatever information is being presented in these notices, one, the most important factor, it relates to you. Two, the information is correctly captured. Third, if the information is correctly captured and it also relates to you, just make sure that you raise the jurisdictional grounds with respect to the reopening of assessment first, and any decisions on merit that you want to rely on, or if you want to make a submission on merit, we highly recommend that you keep it short. If you take the entire argument with respect to merit, it becomes a question of determination of fact. If it's a question of determination of fact, that would anyway be done as part of the reassessment proceedings that will follow under Section 147, read with Section 143(3) and 144(b) of the Act. One has to be cognizant at this stage, what is being asked for is, this is a show cause notice stating that I am in possession of information and you are put to show cause why exactly this reassessment should not be proceeded with. If we start answering on merit completely, trying to justify the transaction, this becomes a question of determination on fact. What needs to be taken up at this stage is jurisdictional issues that have to be properly dealt with by the assessees. So check the information carefully. Just make sure that if the information relates to reliance on certain documents, so in most cases, you would receive notices wherein the reason for reopening is certain investigation that has been done by another assessing officer, or it has been done by the investigation wing, or it can be information that has been passed on by other investigation agencies, just like GST or ED. So if the information relates to a passed on information, one ought to check that the proper documentation with respect to the report, final report, has also been provided along with the copy of reasons. If such a report has not been provided, I would highly encourage that you ask the assessing officer to give you a copy of the information relied upon before concluding the proceedings under section 148A. Once these thresholds have been checked for, the next most important is to make sure that an asset has been identified in your cases. So if you are to agree with the analogy that the benefit of TOLA may not be given at this point when reopening of assessment is being tested for the second time, you can raise this argument not just for AYs 13-14 through 15-16. You can also raise the argument with respect to identification of asset for AYs 16-17 and 17-18 as well. Because then you are putting your jurisdictional argument to the assessing officer. So make sure that all these jurisdictional points are properly addressed, and where any lack of information exists, you should make sure that an intimation from your side is passed on to the assessing officer that complete information is not in existence. You can do so by filing a partial response to the notice under section 148AB, which must have been received on the e-filing portal. Now, more issues will come up with time with respect to how the law evolves around this new controversy. Whether the notice under section 148AB followed by an order under section 148AD, can these be challenged before a high court? And on what grounds exactly can these be challenged? This is a larger question that will be answered in time, as in when the jurisprudence on this subject is received or is developed over time. What we know so far is I can just discuss instances in the third part of the presentation with respect to on what issues so far the court has accepted jurisdiction. Moving on, time is of essence with respect to following the instructions of the Honorable Supreme Court. So what has been allowed so far is the assessing officer was to give a notice under section 148AB within 30 days of passing of the decision of the Honorable Supreme Court. So the first threshold is make sure that you are aware that if a notice is received after these 30 days, this is again an objection that should be raised as part of jurisdiction of the assessing officer. If you've already received the notice, make sure that you're testing all the jurisdictional points that you've discussed so far, and make sure that these jurisdictional issues are raised to the assessing officer. You may also raise all the additional grounds that have been accepted in the past with respect to borrowed satisfaction or non-application of mind at this stage of show cause. What has to be understood is no further opportunity challenging the jurisdiction under section 147 will be entertained after an order under section 148AD is passed. So quite unlike the previous regime, where after the notice under section 148, we sought a copy of reasons, filed our objections, that has all been reversed. So this is the time when you can raise objections against the reopening of assessment at the stage of show cause notice under section 148AB by filing your reply. So we highly encourage that this opportunity may not be given up and a proper reply be submitted to the assessing officer, because a speaking order then ought to be passed within 2 weeks after that. So that is the basic check one has to make sure. We can discuss certain individual queries with respect to information after the technical presentation. We'll leave sufficient time for the same. Coming to the next part of the presentation, now I will just discuss broadly certain issues that have been brought to the notice of the court under the new regime of 148AD. And we'll also discuss areas where the Honorable Court has agreed to interfere under the writ jurisdiction under Article 226. So another aspect before I go further, one needs to understand I'll just draw a parallel here. So you must be aware of section 263 of the Act. Section 263 relates to the power of revision after an assessment order has been passed. Now, this power of revision is exercised by the PCIT, and against such exercise of power, the jurisdiction lies in appeal before the ITAT. So generally what happens in 263 cases, once an order assuming jurisdiction under 263 is passed by the PCIT, assessment proceedings start before the assessing officer. At the same time, you can challenge the jurisdiction under 263 by filing an appeal before the ITAT. So what happens is your assessment runs parallelly with the appeal against the jurisdiction. Say in a situation that prior to the completion of assessment proceedings, if the Honorable ITAT is to hold that the jurisdiction was wrongly exercised, it quashes the order under section 263, and the natural analogy is your assessment proceedings are also to go, because the assumption of jurisdiction under section 263 has already been quashed by the ITAT. So this is a situation under 263. Now, what is the fate of an order under section 148 AD? So if you read sections 246A and you read section 253, an order passed under section 148 AD has not been provided any opportunity of an appeal. Therefore, as far as assumption of jurisdiction under section 148 AD is concerned, it is a final order. There exists no remedy within the Income Tax Act against such an order. It has been argued by some academics that one could file a revision under section 264 of the Act, which allows for revision of any order passed by the assessing officer. We are of the firm opinion that where the opinion of the CCIT or PCIT already stands merged by way of providing the sanction to the reopening of assessment, again, referring such an order under section 264, one might lead to the same result. And secondly, it would not be an efficacious remedy, because the time period for completing assessment under section 147 stands at 12 months. And so does the timeline for completing a review under section 264. So one might have to parallelly run two proceedings, that is one under section 264 and the other under section 147 of the Act. So it might come to a situation where the assessment is concluded prior to the order being passed by the Honorable PCIT or CCIT exercising jurisdiction under section 264. So what do we do in such a situation where there is a blatant violation of principles of natural justice, or there is on the face of it an apparent usurping of jurisdiction by an assessing officer? So far, honorable courts have been very selective as far as entertaining matters with respect to challenging orders under section 14880. So it is not in every case that the honorable court has decided to interfere, and it is only where by on the face of it a jurisdictional anomaly can be demonstrated before the honorable courts that an interference can be sought. Honorable Delhi High Court has already decided certain petitions where it has quashed the order under section 148 AD. The grounds for such quashing have relation to orders being passed in a non-speaking or cryptic manner. Also, jurisdiction has been entertained with respect to cases where the relevant documents, that is the investigation report or a final report or valuation report, etc., have not been shared with an assessee. Further, jurisdiction has also been entertained in scenarios where time lesser than the time that has been allowed under the statute is being given. So the statute allows for a minimum period of 7 days and up to 30 days in order to give a reply to a notice under section 148 AB, where the assessing officer has erred in not providing even the minimum time or has not entertained the request for an adjournment as provided by the assessee. In those cases as well, the honorable courts have interfered to provide the opportunity of representation at the stage of deciding jurisdiction. So prima facie, what could be scenarios that could have been challenged before an honorable court, where say information has been given in a particular notice, but the said information does not relate to you. There are several instances where information is just randomly shared and it does not even relate to you. I was introduced with these facts of a case where the entire banking transaction in the respective year with respect to the assessee was 25 crores. But the assessee received the information that you have done banking transactions of 770 crores. Therefore, this is a blatant violation because the information in itself is incorrect. And this information is the very basis of exercising jurisdiction under Section 147. So one has to be extremely careful to make sure that any incorrect information which is being made the base of your reassessment is properly challenged. If we do not challenge or deny the existence of such an information, essentially an order under Section 148 AD acts as a writing on the wall that this is the information in existence. So if you're if you are aware of the criminal justice system in this country, the information in possession with the assessing officer can be treated as equivalent to a complaint being filed. So various officers or various tax evasion petitions or other sources of information will be provided to the assessing officer in the form of a complaint. Now he has to decide whether to proceed with issuing a show cause or to just drop the information. Where he decides to issue a show cause notice and after that an order is passed, that could be an equivalent of an FIR. Now that information has been given a certainty that, okay, prima facie, there exists a case against you which requires investigation and trial. Now, once this stage has crossed, your only remedy is an acquittal in trial. And that is going through the entire procedure of assessment and then coming to a conclusion that, okay, what you're saying is correct. So just make sure that if the information is outrightly not in relation to your assessee, this fact is duly clarified. Secondly, if the information in itself is incorrect, say the information that is provided to you relates to certain bogus invoices received by you, but it is a case where you have issued the invoice. In those cases also, the concept of an asset gets reversed. So this could be a very relevant point when you're taking up your arguments, because you have to be certain that the information is correct and the jurisdictional threshold of an asset, especially for years beyond 3 years, has been properly met. In my opinion, this argument should be raised in all the years from 13-14 through 17-18. It is not a decided position in law as to whether the interpretation as given by CBDT is correct or not. But there could be two outcomes of the interpretation of the order of the Honorable Supreme Court. This would get further clarified over time, and we'll definitely keep you posted on how this interpretation goes. But for today, I think the only recommendation as it stands is one should be very cognizant of these notices that are being received. Time period is of essence because only 2 weeks are being provided to all the assessees. Just make sure that you are raising your preliminary jurisdictional grounds prior to any discussion on merit. And just make sure that you are not giving any self-incriminating documents at this stage, which might hamper the assessment proceedings further, because those findings will then be given in the order under 148 AD. So this was the 3-part presentation with respect to the various judicial updates as far as the controversy under Section 147 is concerned. So we have gone over what the law was, how the law has been interpreted, and how the honorable courts are now interfering with respect to the new provisions. With this, I would request our panelist, Shri Ashish Agarwalji, to just add his views on this controversy, and probably we can further discuss this issue.
अनम्यूट कर लें आशीष जी।
म्यूट कर लिया जी। कक्कर जी कैरी ऑन कराओ इसको आगे फर्दर जो इशू है। हेलो
ये रिक्वेस्ट द व्यूअर, आपके पास कोई क्वेश्चन हो तो आप ले सकते हैं जिसको भी, अदरवाइज निखिल जी यू कैन कैरी।
अभी कोई क्वेश्चन मेरे माइंड में ऐसा नहीं आ रहा है। नॉलेज तो उन्होंने पुलिस शेयर कर ही दी है।
So we can also open to questions from the audience, because that would help if they have any specific issues or certain studies to discuss.
Definitely. May I request the audience, if you have any question, you can raise your hand and ask the question. अभी तो कोई क्वेश्चन है नहीं सर, आप आगे।
All right. All right. So I see one raised hand, Shubhankar.
Yeah. शुभांकर गर्ग जी, या गर्ग जी आप पूछे क्वेश्चन अपना जी। अनम्यूट योरसेल्फ एंड आस्क द क्वेश्चन जी।
Hello.
या सर पूछे जी।
Yeah. Sir, my question is regarding the notices which were issued on 31st March 21. I mean, they're dated 31st March 21, but the service has been done after 31st March 21. And we have sufficient proof for the same also, because the mail has been received later and the message also. And the digital signature of the signing officer is also after the date. So any update on the status of those cases? Sir?
All right. So for you're asking specifically with respect to Punjab and Haryana High Court, right?
Yes, sir.
All right. So the situation so far is, I'll just draw like a proper chart for you here. What happened is, the first case before the Honorable Court was a notice that was issued after 1st of April 2021. The lead case was Civil Writ Petition number 13990 of 2021. It is the case of Abhimanyu Sagar. In that interim order, our Honorable Court relied on the pendency in the Honorable Delhi High Court, and they had issued interim directions of stay. That was the first writ petition. After that, it came for consideration before the Honorable Court. Scenarios where the notice is dated 31st of March. Now, there are two types of scenarios which break down from here. There are scenarios where the notice dated 31st of March is either unsigned or is signed after 31st of March. And the second set of cases is where the notice is dated 31st of March and is signed somewhere on 31st of March itself. How this evolves further is, all these notices have one thing in common. They were served on the email of the assessee on or after 1st of April 2021. There are cases ranging from the service being done as early as 1 a.m. on 1st of April to cases where the service has been done on 16th of April 2021. So this is the entire range. What is to happen now? So as far as the Honorable Supreme Court's decision is concerned, it will only apply to notices which are dated 1st of April 2021 and onwards. So this decision is not applicable to cases of 31st of March 2021, nor is it applicable to cases where we have challenged the notice signed on 31st of March 2021 to have been served on 1st of April. Those cases fall under a separate petition, which is CWP number 14886 of 2021, DLF Gayatri Developers. That is the lead case in those decisions. So this particular bunch will be taken up for hearing after the vacation. So the Honorable Court is to be on vacation from 3rd of June till about 3rd of July. So after that, it is expected that this bunch will be segregated from CWP 13990, and this will have to be decided by the Honorable Court. So this controversy so far has not reached the Supreme Court. It is only the controversy with respect to notices issued after 1st of April 2021. There are decisions of various honorable courts. Honorable Madras High Court has passed a decision in favor of revenue, stating that where a notice is issued, they have taken the meaning of issued as notice being digitally signed. Then there is decisions of the Honorable Allahabad High Court, which favors the assessee, wherein they say that the order ought to have gone out of the control of the income tax department. And that is said to be out of control of the income tax department when it is sent on the email of the assessee, which is after 1st of April. In those cases, the relief similar to the relief in the first batch of petitions has been granted. However, this controversy is still pending before the Honorable Punjab and Haryana High Court, and it will remain so for some time. But the status of your stay is active. The stay shall remain on those notices.
Okay, so these notices do not stand disposed by the Supreme Court judgment, right?
No.
Okay, thank you.
Further, there have been cases where even after stay being granted, there have been certain inadvertent passing of orders by the National Faceless Assessment Center. In those cases, it is recommended that a contempt petition be filed so that stay can be taken from the income tax department.
Okay, sir. Thank you.
Yeah. So I'll take this question in the chat box as well.
Yeah, you can take.
In my case, a notice has been issued after 31st of March and later on assessment also framed. We have filed the appeal before the CIT appeal, whether the Honorable Supreme Court decision will help the assessee. Definitely. So if I understand the question correctly, Nareshji, your notice is dated 1st of April or onwards, and it is digitally signed as well 1st of April and onwards. Is that correct? I assume that, okay, this is the interpretation. This Honorable Supreme Court decision will come to your remedy, because what has now been done is the entire proceedings have been nullified. Whatever was done between 1st of April 2021 and 30th of June 2021 has now to be done again. What we have to do is we simply have to state this fact to the assessing officer and get the renewed notice issued. So, but this is only relevant for cases where the notice under section 148, that is the previous law, has been issued on or after 1st of April 2021. And I believe there is already a decision from the Honorable Delhi High Court, which has clarified this position as well. As of now, I currently don't remember the name of that decision, but this has come for consideration before the court as well. All right. So in case there are no further questions with respect to these 148 notices, another controversy that has taken up a lot of shape over the past 1 year and is evolving over time, I'd like to briefly touch upon section 144B of the Act, that is the faceless assessment procedure. Now, a very major amendment has been undertaken by our legislature in Finance Act 2022. This relates to the omission of subsection 9 of section 144B of the Act. Essentially, section 144B of the Act provides the entire code in terms of the procedure to be followed by the assessing officer at the time of conducting the faceless assessment. Section 144B subsection 9 specifically provides that where an assessment is concluded without following the procedure as enshrined in the previous subsections, such an assessment will be deemed to be non-est. So being non-est means an assessment void ab initio. So the controversy before various courts arose when certain provisions, especially with respect to passing of orders as required under the faceless regime, were not followed, or situations where a VC request was not entertained. Now, if we go through the entire procedure, there are multiple steps where a violation of procedure can actually lead to a case becoming non-est. So the stages include, at the first instance, a notification being provided by the National Faceless Assessment Center that the case has been transferred from the jurisdictional AO to the National Faceless Assessment Center. The second stage is at the time of issuing you a show cause notice in case you are not filing any responses. This show cause notice is issued under section 144 of the Act. Another area where where a notice ought to be given is passing of a draft assessment order. And thereafter is the stage of allowing a VC and thereafter passing the final assessment order. So at any of these stages, if the procedure is not properly followed by the Income Tax Department, there are a sea of judgments by Honorable Delhi and Bombay High Court where such decisions, where such assessment orders have been quashed and remanded back to the assessing officer for proper disposal. Now, controversy arose as to why remand these decisions back when they are bad in law as per section 144B subsection 9. This traveled to the Honorable Supreme Court in two separate SLPs, one filed by the assessee and the other filed by the Revenue. Revenue's argument is that the amendment under section 144B subsection 9 is a retrospective amendment, meaning thereby even the cases which were decided prior to 31st of March 2022 are not given the benefit of section 144B subsection 9. This becomes a question of constitutional validity of such a retrospective omission, because it is not merely a procedural amendment. 144B subsection 9 cannot be held to be a provision which is only providing procedural relief. It is a substantive relief because it declares any order passed in violation of the procedure set by the legislature to be non-est, meaning thereby there is no need of filing an appeal because the order in itself is void. It was again an amendment that was introduced with a very benevolent thought. Section 144B procedure was introduced with a very benevolent thought. The Income Tax Department wanted to ensure that the assessee is not unduly harassed. However, with the judicial interventions quashing all assessment orders where such procedure was not followed, Revenue has decided to take away this benefit, which is a substantive benefit. And in our legal opinion, it should be applicable up to 31st of March 2022. Therefore, any order that has been passed up to 31st of March 2022 shall be allowed the benefit of subsection 9 of 144B, making the orders non-est where the procedure has not been properly followed. So this controversy shall take some time to settle. It is already before the Honorable Supreme Court in two different SLPs. The issue is also pending before the Honorable Punjab and Haryana High Court. There are some 50 to 60 odd cases that are pending before the Honorable Punjab and Haryana High Court. The next date of hearing in these cases is 28th of August as far as our Honorable Court is concerned. But yeah, we'll keep you posted. This is another very interesting provision. So one may test this if you have filed your CIT appeals already with respect to orders passed up to 31st of March 2022. I think if there has been a violation of the procedure under section 144B, you may also consider raising an additional ground before the learned CIT appeal. Because as this controversy settles in the future, there is a possibility on this very jurisdictional ground, you may be able to get a relief at a higher appellate forum. So one should be cognizant and maybe take this ground at appellate stage now, if not already considered in your grounds of appeal. So I'll again request the audience, if there are any doubts or questions, either with respect to the procedure, the new procedure under section 148A subsection D, or with respect to this new controversy of raising an additional ground with respect to an order being non-est, we can discuss specific facts of the case. Hello.
Hello.
Bluetooth mode.
Yeah, so I'd like to discuss one case wherein we have asked for video conferencing in the reply submitted to the AO. But since that button, which has now been made applicable under e-proceedings to ask for video conferencing, was not available, we were not provided an opportunity. So should we take that as a ground with the appeals, with the commissioner appeals?
Right. So technically, an opportunity of being heard is covered within the principles of natural justice. This principle in Latin terms is called the principle of audio alterum partem, to hear the other side. Now, department has introduced a system whereby a VC button has to be pushed on the e-filing portal to seek a video conferencing. However, we are of the firm opinion that one should not leave such jurisdictional grounds at all. Even if you have made such requests by filing your reply, this can duly be raised in the appellate stages as a violation of principles of natural justice. However, one must be cognizant, if we are raising the ground of principle of natural justice, it has to be followed by certain additional evidence being adduced. So this loss of opportunity that has arisen in your case should go to evidence that certain documents that could not be filed at the time of the assessment proceedings, you now have that opportunity to file such a document during the appellate stages. What I would say is this makes your task a little bit easier in terms of admitting additional evidence, because at the end of the day, additional evidence is at the discretion of the appellate authority whether to admit the same or not. So we request that you test your case on this ground. And definitely at a higher appellate stage, depending on how this controversy pans out. So there are two ways to go about it. Say, even the Honorable Supreme Court may end up saying that quashing in itself might not be sustainable. One must be given an opportunity of remand back. Since you're already at an appellate stage, I would say you should drop this ground at, say, the second appellate stage if the ITAT is to give a finding that since opportunity of being heard was not provided, the case be remanded back. So I think that would be a situation that will not really favor the assessee in any way. But you should definitely look at the possibility of filing additional evidence that could really help your case.
Oh, okay, sir, thank you.
We can take some more questions if the audience has any doubts or queries. You may unmute, or the other option is the chat box as well. So I'm taking note of the chat. So in case somebody wants to post a question in the chat box.
I think, sir, nobody have question. So can we move forward?
That would be the end of the technical presentation, sir. Right, seeing no further questions, I would like to thank the branch for this great opportunity to address our fellow members today. And I hope there was some takeaway from this presentation with respect to strategies on how to deal with the new notices being issued under Section 148AB. And this is going to be a longer controversy. We can't really say it is settled as on date, but there would be additional challenges on the way. The best way forward is to make sure that we comply with all the provisions of the Act and just fight out cases on jurisdictional issues more carefully, identifying and culling out the necessary information just to make sure that a proper disposal of a 148 AD order is there. Where there are exceptional grounds for interference, one may also consider filing a writ petition in the future, and that should always remain open. So with these words, I wish all the professional colleagues best of luck with respect to responding to the notices, and there must be a plenty received by all of you. So yeah, you can also freely discuss these with us at a future date if you would like to. I'm always available to take queries after the session as well. So you're most welcome. And with this, I would like to conclude today's presentation. Thank you.
So thank you, Nikhilji. Thank you very much. So good evening to each and everyone, respected members. So I, Sahil Garg, Treasurer of Chandigarh branch, get the opportunity to just for a formal vote of thanks for today's webinar. I, on the behalf of Chandigarh branch of ICI, would like to thanks everyone. So thanks, Nikhil Goyalji, our keynote speaker. So we are also thankful to Ashish ji for panelist. We are also thankful to all the seniors and other members for this participation. In the end, thanks to everyone and have a nice day. Thank you, Nikhil ji. So if anyone have any question, you can directly connect with Nikhil sir also. So thank you, sir.